Okay, the next thing we're going to do are some sales related transactions. And don't forget, we don't have fee income anymore. We've got sales and then like a cost of sales. Those things go together. So we've got five transactions to journalize. And the first one is we sold merchandise for cash, and the cost of the merchandise sold was $72. So let's do our sales first. For one, I would have a debit to cash and a credit to sales for $116.3. Okay, and then to do the cost of the merchandise sold was 72,000. So I'm going to put it right in cost of goods sold, COGS. They might also call it the cost of merchandise sold, and then we're going to credit inventory. So it comes off the balance sheet and goes into the income statement for 72,000. So now, if you think about the income statement, which you know so well by now, the sales are on there for $116.3, cost of sales are $72, and the net amount is gross profit. Okay, good information. Okay, the second one we have is we sell merchandise on account for $755, and the cost was $400,000. So now instead of cash, we've got a debit to accounts receivable. Accounts receivable for $775,000, and credit sales because we've earned it, so we recognize it. And the cost was $400,000, so debit cost of goods sold and credit inventory for $400,000. And again, the net of the sale and the cost of goods sold is our gross profit. We've made $375,000 on. Okay, and the next one is 3. We sold merchandise to customers who use MasterCard and Visa. Okay, a little twist here. For $19.50, and the cost of merchandise sold was $12.50. So MasterCard and Visa, and you know what happens is they charge you usually quite a bit, 2%, 2.5%. So for 3, I'm going to have, we're going to call it cash. $19.50. They're not dealing with the fees here, I guess. It's just like cash. And credit sales for $19.50. And then the cost of merchandise sold was $12.50. So again, cost of goods sold, credit inventory for $12.50. Okay. Alright, then we just got a couple more. The next one is sold merchandise to customers who used American Express for $3.30. The cost of merchandise sold was $2.30. Same thing. We're going to call that cash. And sales for $3.30. Oops. Extra 3 there. The other thing I want you to notice is see how I put my debits to the left and credits to the right. That's how they all are here. That's how yours need to be. They should not be in a straight line. And these accounts should be like this also. Because visually then, if you were an accountant or a financial person looking at this, you'd know right away what you were looking at. Okay? And then cost of goods sold and inventory for $2.30. Making money hand over fist here. And then finally, the last one, here's where we pay the fees. Paid $81,500 to National Clearinghouse Credit for service fees for processing MasterCard, Visa, and American Express. And what you do is, if you want to use these products, you've got to use an intermediary company who does all the transfers for you. You know, and it's worth it because half the time you wouldn't have the sale if you didn't have them. So what we're going to call that is just credit card expense. And credit cash. It would probably come out of our account as a debit, you know, $81,500. Okay, So those are what sales transactions are like, and what you want to remember is that whole thing is there, okay? And this is a perpetual inventory system. We're not going to do the periodic because computers have changed a lot of things. Okay,